Hello and welcome to Last Week Tonight. Tonight we're diving into the world of corporate fraud, but don't worry, we'll try to make it as fun as a root canal. Our subject? The Satyam Computer Services scandal, a tale so wild it would make Bernie Madoff blush. Picture India in the late 1980s. The economy is opening up and there's this newfangled thing called outsourcing taking root. Enter Biraju Ramalinga Raju, a man with a dream and a knack for computers. In 1987 he founded Satyam Computer Services, a company destined for greatness. Satyam, meaning truth in Sanskrit, quickly rose through the ranks, becoming a darling of the Indian stock market and a global IT player. Investors were thrilled, pouring money into Satyam, convinced they were witnessing the birth of an Indian tech titan. But remember that whole truth thing? Yeah, about that. In a shocking turn of events on January 7, 2009, Raju dropped a bombshell. He confessed. He admitted to cooking the books, inflating profits, and basically running Satyam like his own personal Ponzi scheme. The scale of the fraud was staggering. Billions of dollars, folks, billions. Raju's confession sent shockwaves through India and the global financial markets. It was India's Enron, a colossal failure of corporate governance and a betrayal of epic proportions. The Indian stock market went into a tailspin, investors were left reeling, and the reputation of India's booming IT sector was tarnished. The confession, a rambling letter addressed to Satyam's board, read like a bad financial thriller. So, how did they pull it off? Well, imagine a giant house of cards built on lies. That was Satyam. They created thousands of fake invoices, invented non-existent employees to inflate salary expenses, and even forged fixed deposit certificates. The fraud went undetected for years, thanks in part to the complicity of Satyam's auditors, Price Waterhouse, PwC. PwC, one of the Big Four accounting firms, failed to detect the massive discrepancies in Satyam's books, raising serious questions about their auditing practices. It was a major scandal for PwC, further eroding public trust in the accounting profession. The scandal also exposed the cozy relationship between auditors and the companies they audit. Section 4. The aftermath, investigations, convictions, and a corporate rescue. The Indian government, already facing criticism for its handling of the global financial crisis, swung into action. The Central Bureau of Investigation and the Enforcement Directorate launched investigations into the fraud. Arrests were made, including Raju and his brother, the company's former managing director. In 2015, after years of legal battles, a special court in Hyderabad convicted Raju, his brother, and 9 others of criminal conspiracy, cheating, and forgery. They were sentenced to prison terms, bringing a semblance of closure to the scandal. In a bid to salvage what was left of Satyam, the Indian government stepped in to oversee its sale. Tech Mahindra, another Indian IT firm, emerged as the winning bidder, acquiring Satyam in a government-supervised auction. Section 5. Echoes of Enron Parallels and Lessons Learned. The Satyam scandal drew inevitable comparisons to the Enron debacle in the United States. Both involved accounting fraud on a massive scale, a failure of corporate governance, and a breach of public trust. The similarities were striking, highlighting the universal nature of corporate greed and the need for robust regulatory mechanisms. The Satyam scandal underscored the importance of whistleblower protection. In the years leading up to Raju's confession, there were whistleblowers who tried to raise the alarm about Satyam's accounting irregularities. However, their concerns were ignored, highlighting the need for stronger legal frameworks to protect whistleblowers. The scandal also exposed the limitations of regulatory oversight. Section 6. Satyam's Legacy, a turning point for corporate governance in India. The Satyam scandal was a watershed moment for corporate India. It forced a reassessment of corporate governance practices, auditing standards, and the role of regulators. The scandal led to a slew of reforms aimed at preventing a repeat of such a massive fraud. The Indian government introduced stricter accounting norms, tightened corporate governance regulations, and strengthened the powers of the Securities and Exchange Board of India. The Satyam scandal served as a catalyst for much-needed reforms in corporate India. It was a painful lesson, but a lesson nonetheless. The scandal's legacy continues to shape corporate behavior in India, emphasizing the importance of transparency, accountability, and ethical conduct. And that's our show. Join us next week when we'll be discussing, well, something far less depressing, hopefully.